Ask someone how much money they need to completely retire, and you will usually trigger an immediate spike of anxiety. It is arguably the most daunting question in personal finance. How much money do I need to last for the rest of my life? Most people answer that question by using the depletion model. They operate under the default assumption that retirement requires building a massive, finite pile of cash during your working years, which is then steadily drained to pay for your life after you stop working. Because this model relies on a finite pile of cash, investors are terrified about living it. No one wants to reach age 90, realize they are out of money, and have to go look for a job. To avoid that outcome, people simply guess an arbitrarily huge number, often something like $10 million, hoping a pile that size will take decades to disappear. Calculating your retirement as a strict countdown to zero guarantees failure. When you plan this way, your financial target is dictated entirely by panic rather than actual mathematics. Living with an unreachable $10 million goal hanging over your head is exhausting. Every time you check your accounts, you are reminded of how far away you are from that arbitrary finish line, creating a perpetual feeling that you are permanently behind. That intense feeling of inadequacy causes individuals to abandon slow, steady, and reliable wealth-building strategies. When you believe you need $10 million, an index fund that grows at 7% a year feels far too slow to ever matter. This leads directly to desperate behavior. To close that massive perceived gap, investors start chasing high-risk, impulsive bets. They pour cash into volatile cryptocurrency, untested tech stocks, or the latest hyped IPOs in a rushed attempt to strike it rich. The formula you use to calculate your target secretly dictates your appetite for daily risk. Bad math creates desperate investors. The wealthy look at retirement through an entirely different lens. Instead of planning for depletion, they use a perpetual yield model, a system where the principal balance of the portfolio is never touched. This model relies on building an asset that purely produces an income stream, often referred to as the golden egg. Instead of chipping away at the egg itself to pay for your life, you build a portfolio of assets that generates a continuous loop of cash, while the main circle remains intact. We can apply a conservative 4% annual yield rule to that panicked $10 million goal to test its logic. If you have $10 million invested in a conservative portfolio generating 4% a year, you would be pulling in $400,000 in pure interest, year after year, forever. This chart highlights the absurdity of that $10 million target. If your current income is $70,000 a year, you likely don't need $400,000 in expendable annual income to maintain your lifestyle. Using the depletion model forces you into setting a goal that vastly over-prepares you for an income you don't even need. We can calculate the math based on realistic, actual living expenses instead. If a couple currently spends $60,000 a year, they could double that to $120,000 to be safe and comfortable. This equation reveals the true portfolio size required to generate that lifestyle. By taking that $120,000 target income and dividing it by a safe 4% yield, the required portfolio is exactly $3 million. Accepting a slightly more aggressive blend of assets for a 6% yield alters the math even further. Now you only need a $2 million portfolio to produce that same income stream. Changing the mechanical model shrinks an impossible $10 million mountain into a tangible hill. This shift in perspective offers an immediate psychological reward. When you run the actual numbers, the haze of financial anxiety is replaced by clarity and direction. Possessing a concrete, realistic finish line makes it much easier to be a patient investor. When you can see exactly how a safe investment strategy will hit your target, you are far less likely to be swayed by the urge to make reckless, get-rich-quick bets. Financial peace is the byproduct of defining an exact, calculable finish line. It replaces the endless drive to hoard cash with a clear mathematical objective. You can reverse engineer your own number right now using a 3-step framework. Step 1 is establishing your foundation. You must calculate the exact cost of your life, every bill and expense, per month and per year. Step 2 is determining your target. You need to decide on the specific annual income your investments must produce to cover those costs comfortably. Step 3 is the formula. You simply divide that required income by your chosen safe yield percentage to find your final portfolio target. True financial freedom begins with defining the exact cost of your life today. Once you have that number, you can mathematically engineer the specific investment machine required to pay for it.